Sound is low. Okay. How is it now? How we doing? How we doing now? Is this better? Better, or do I still need to turn it up? It's good. Okay, sick. All right. So let's get rolling here. Cool. So if you've never met me before, I'm Crypto Chase. I've been in crypto since 2017, trading since 2016. Perfect, great. I'm getting good responses on the audio. Awesome. Yeah, first time streaming, so we'll see if there's any technical difficulties or anything. Hopefully not. You should be able to currently see the Bitcoin chart with the Kraken Pro interface. Yeah, so let's get going. Before we start, I will just say, as always, nothing within this stream constitutes financial advice, and you should seek the advice of a registered financial advisor. All trading involves risk of loss, and no guarantees are returned. Not everything discussed or shown today will be available in all jurisdictions. And I also want to say a big thank you to Kraken. Before I read, basically the spiel I wrote about them, I just want to, briefly just speak from the heart. If you know me, you know I don't really take many sponsorships at all. I think it's been years since I've had like an exchange sponsor. Me and Kraken were very aligned on how we wanted to do things. They were going to allow me to create content my way. And so this is pretty much it. I'm, happy I got to partner up with them. They seem like a great company to do business with, and I'm looking forward to working with them for a long time in the future, hopefully. So, a little quick, some notes about Kraken, just to tell you guys about them, and then we will officially start. So, yeah, want to give a big thank you to Kraken for sponsoring the streams. They are the one-stop shop for crypto, index futures, metals, commodities, and they have stocks with their X stocks offering. And for funds that are not currently in use, they do offer up to 5% APY on USDC through their DeFi Earn product. They offer quick and easy onboarding, instant buy and sell for crypto, the ability to set up dollar cost averaging, and they offer both an easy consumer platform and a professional platform for advanced users, which is Kraken Pro. They were founded in 2011 and they're still around today. So for me, that makes them a pretty damn trustworthy exchange. They are currently running a 3% deposit match on any deposits. So if you deposit 100K, they give you 3K. It's a pretty amazing offer. That also applies to any Bitcoin or anything you deposit, any crypto you deposit on the platform. Just make sure to opt in on the Kraken app to get the 3% deposit match. So if you're looking for a new home, Kraken is a great place to be. And yeah, I think that's my information about Kraken. Like I said, I'm happy to have them as a partner, and I think it will be great for everyone in the future. You get to bring this content to you guys for free, sponsored by them, Kraken. And let's get going. So, as you guys always know, I'm a big fan of my water and health. So, throughout the stream, I'll be taking little sips. I urge everyone to grab some water, grab some food, whatever you need, and yeah, we'll get going. So, the rundown of today's stream will basically be I'm going to talk about we're going to go over just some general trading alpha for people who are new to my stream and new to me. And also, things over the past year that maybe I haven't, said in the WAP videos or anything. WAP videos are in the past. Um, and yeah, so we'll go over overall just like trading alpha, high time frame stuff. And then we are going to move into, just reading the chat. Is there going to be a schedule? Yeah, it's likely going to be 3 times a month for the streams. And I'll try to gonna try to do it like this, where I basically have like the first segment is going to be recapping some recent trades, some that would maybe have been live called, some were maybe just like educational posts, to give you an insight into how I take my trades each day. And then, like I said, so we'll go over overall like high time frame, bias, alpha, and whatnot, and then we'll go into more nuance, and then we'll go into some of the psychology with trading. Then we will move into charting and talking about some potential trades for the future, and we will go over some requests if you guys have any requests for charts. All right, I'm gonna get my sip in now. All right, so the first thing we're gonna do is we're gonna talk about just overall how I approach the chart. And what's really important is bias. Okay, so bias is going to be everything. You really don't want to be constantly fighting the high time frame bias of the chart. All right, and for a lot of the examples today, we're going to go through. We're going to use ES. We're going to use gold. We're going to use Bitcoin. We're going to use silver. But before I do start showing you the charts, let's go over a couple things. So when I talk about ES, because I talk about ES a lot, so ES is the same essentially as SPX. ES is XPS, is the S&P 500, is SPY. Okay, these are all the same things. Okay, it's just different versions of them. So if you don't have access to say like an ES future or something, which by the way Kraken does offer, we can go to futures. And we can go to, they also have MES, which is the micro contract. That's also available in traditional finance, which is 1/10 of the ES contract. Okay, here you go, ESH. So Kraken does offer these. So I'm always talking about ES, right? So I just wanted to get that out of the way that, ES, MES, SPY, SPX, S&P 500, these are all the same things, okay? Contract wise, of course, they're different. It's different sizing, it's different risk amounts, but essentially it's all the same chart, okay? And same is going to apply for when we go to like, let's say a gold, right? So XAU USD, GLD, GC, MGC, okay? GC is the futures contract like ES, MGC is your micro gold futures contract, which I believe is 1/10 the size of GC. Okay, and same is going to apply to silver. So for silver, we're going to have XAG USD. We're also going to have SLV. We're also going to have SI, which is the largest silver contract. And we're also going to have SIL, which is the mini silver contract. So once again, just showing you guys that, essentially all these charts are the same. Okay, it's just different risk amounts, different ways to, go through them. All right, so here's all your, Kraken has your SI, your SI. This is the current contract is K, so it says SIK, but it's SI, and then you have SILK. So that is your smaller silver contract. Okay. And again, these, these assets can be found everywhere. Is this going to be recorded? Yeah, it should be recorded and stay on my page. I don't see why not. Okay. So now that we have that covered and we've talked about, all the logistics, right, of, like I said, ES, because I feel like a lot of people get confused. They're like, oh, what is ES? And then you have some people saying S&P 500. You have some people saying S&P. Jamo says he invented silver. All right, Jamo, you're an animal. So let's actually get into it, right? So bias is everything. We want to focus on structure and liquidity draws. So the first thing we're going to do is we're going to, when developing bias, we want to get to pretty much as high time frame as we possibly can. It's just going to give us an idea of where we're going, and then we're going to refine, okay? So I'm just here on the 3-month on ES, right? And I see that a high has been taken, so we swept the high. Typically, after that, you sweep the low. My bias has been on ES downwards. If you look at, and hopefully I have these tweets in the right order. So I was 1 day early, slightly, this went to here, I believe. It just went slightly higher than I had imagined. So I did not profit from this trade. It was just a break-even trade, if you remember following it on my feed. Excuse me. How do I just, okay, great. So the point of this, though, is to show, my bias has been ES to move down to 67.50, and we are seeing, currently around 67.50. Overall, on a higher time frame, like I said, typically you're seeing, I'm showing you the highest time frame bias here. We can move down to, let's say, a weekly, and then we can do a weekly bias. So I do think this is my higher time frame bias. I do think this is where we're heading over time. It doesn't mean there can't obviously be bounces in between. Sorry if I'm moving my mic around and whatnot. Sometimes I'm still getting adjusted to the setup and making sure you guys can hear me well. So I'm sorry if the volume bounces around a little bit. So when I'm looking at something like this though, and if I didn't go to that 3-month and I'm just looking at the weekly, what I'm seeing is first I'm taking the highest high, and then I'm looking at, the highest high that has been swept. So this has been swept here, and then I'm taking the low. Okay, so I have the highest high that's been swept, and I have the low. And then I saw, okay, well, the low was swept here, right? And then we've been putting in, we'll go to the daily now. We've been putting in lower highs ever since, right? So we had a high, we had a low. We swept the high, we swept the low. We then made a lower high here, okay? We then test the low again. We then made a lower high off of this supply, right? Origin of impulse down. This is where the big down move began. We come up, we retest it, we make a lower high again. Now we test the bottom of the range again. We test it again. We test it again. We test it again. The more times you test the level, the weaker it becomes. Okay? And now we're finally breaking down through it. So my bias was accurate. When I talked about trading to 67.51, did it chop it up? It certainly did before we moved down, and I still think we can go lower over time. That would still be my higher time frame, bias from the monthly 3-month chart. Just seeing if the chat has updated. Okay, give me a second. And yeah, just bear with me, guys. First stream, I'm working off the other screen, and I got the phone going. I'm trying to see the chat, and yeah, etc., etc. So, okay, higher time frame is still that this is headed downwards. And in terms of, bias just development, right? You want to be taking trades that are supporting your bias. So, especially on a higher time frame here, shorts have been much easier, right? Like I said, after you swept the high and you swept the low, you then made lower high from here to here. You then made lower high from here to here. Okay, throughout a daily basis, shorts have mostly been easier. So shorts can essentially you can focus on shorts when the bias is bearish, right? Outside of liquidity sweeps. So that is something to keep in mind too, is that you want to target the nearby liquidity. And that is a time that you can shift bullish momentarily, right? So see this big sweep here, you get a strong bullish move, okay? So that was a sweep of this low, you swept here, and you go up, strong bullish move, right? The next time you get a decent move, and obviously there is some other ones, but you could look in here and you could say, oh, okay, we had 3 equal lows built up. We swept the 3 equal lows and we move up. There's a strong move up. We go down and we look at the next liquidity sweep. Okay, you get a liquidity sweep here, you move up. And we go down to, I think the next liquidity sweep was on like a 4-hour time frame. It was down here. There's another liquidity sweep, right? There's another strong move up. So what you want to be doing is you want to have the bias of, playing the high time frame bias downwards, but be ready for liquidity sweeps for counter moves. Your strongest counter moves are going to come from those major liquidity sweeps, and those should also be your targets on shorts. Okay? Hopefully following along there. Okay. All right, we are moving on to the next part of the alpha, which is first test, best test. And I have it on from silver on this. Okay. So this silver trade, and like I said, we'll be going through fresh charts later. The goal is to probably run this for, an hour, 15, hour and a half. We'll see how it goes. Just going to take my time with it and see how it flows, and we'll improve as we go on and see what people like and what people don't like. But so yeah, this silver trade, it was a local bearish bias, right? We can see that obviously, right? You just take a look at the chart. A lot of people ask me, how do you see where liquidity is? How do you see where supply and demand is? Of course it is about charting hours, but it also is just about looking at the chart, right? Like we can just see this is a local bearish bias. It's been downtrending quite hard. So we had a local bearish bias. Okay, it's over here. Price approaches this resistance right here. And now this is the first test, right? So this is going to be your highest confidence trade. And this is just a another tidbit of alpha for you here, just to have these written down and just think, okay, so we're looking to trade in the direction of bias, right? And then we're looking for first tests of levels. So if we go back to silver now, if I can, do I want to grab the silver chart or no? We can keep going through it here. So we came into resistance, and also you fulfilled this fair value gap here, right? And then you just target liquidity of the same time frame. So on here, we're on a 15-minute time frame. This was a local bearish bias. Price came up into here, and it goes down, takes these equal lows out right here. Okay, it's important to have a clear target if you're going to be taking a position, right? So it's not always just about, oh, look, there's a fair value gap here. Oh, look, there's a supply or there's a demand here. You need to have a target that's associated with that trade. Honestly, before I take most trades, it's almost always I'm like, oh, so these lows like are definitely getting swept today. And that's how I find, so I already know my target. And then it's just a matter of me finding my entry. Okay, so sometimes we'll just draw, but sometimes the entry might be, let's say I have a liquidity level, or let's draw a candle like this, and we're looking for a sweep, right? And let's say it's 9:30 in the morning and the market's volatile, and there's two equal lows down here, right? And I'm like, oh, I want these to be swept. So I'm waiting for, maybe it's a sweep, maybe the fair value gap develops there, right? And you go straight for the equal lows. Maybe it's a deviation, right? Maybe we move up above, and you're like, oh, so now you're starting to question your bias, right? You're starting to think, oh, well, maybe we're bullish bias. Most of the time, just wait. If you are bearish bias on the day, and you might just be deviating, and you might come back down, and the second you lose that level, just treat it as if that was your sweep, and then get in, and that's going to go to your liquidity almost every time. That's a pretty high confidence trade. That happened actually yesterday morning. Let's see if I can find it real quick. So yes, where was it? I think it was here. Yes, it was here. So yesterday morning, I had a bias to, hold on, let me use the replay tool so I can really set it up like how it's supposed to look. I'll just do it here. Okay, I had a bias that these equal lows would be taken out. Okay, that was essentially my bias. And if I went to a higher time frame, it was probably, yeah, okay, yeah, it was these equal lows. I wanted to see them both taken out. Someone just type in chat at some point. I haven't seen the chat update in a little while. Just let me make sure that like everything's still working. I'm not talking to myself. All right, so I had the bias of these equal lows being taken, and on the 5-minute time frame, and this was before. So this was before the market even opened, right? So I actually need to replay this back a little bit further. And okay, yeah, chat's still working, cool. And like I said, I will improve on all this over time, obviously, just figuring out the whole streaming thing. So I had a bias that these equal lows were going to be taken out. And moving upwards, I thought, okay, well, we do have a supply essentially right here, right? This was sort of your origin of your move down. And the only nearby liquidity I could see is like this high, right? So I was like, okay, liquidity into supply. This looks good. So here's what happens on open. Price moves up, right? And it pushes through it, right? And I'm starting to think, as price moves all the way up to here, I'm starting to think, oh, well, this is like, so I get, I forget exactly how it went. I might have got stopped right on the open. I took a couple trades yesterday. I might have got stopped right on the open, and then I was like, oh, so maybe I should start looking for flip bullish here because I had my stop above supply. But then I noticed that price had come back down below the level. And from there, it was pretty simple to just see that they deviated my level, right? That's all it really was. So price came up literally just like I drew you before. I had a level. We had the resting lows down here. We had a liquidity level we want swept. What did it do? It came up, it deviated it, it came back below. The second it came back below, got in immediately. And oh yeah, I remember being pissed when I got front run on this low, but I had no fear. I was like, it's okay, it's gonna come back. And rest assured, There it was. Okay. So that is essentially, one of your setups is to where if you believe in your level choice strongly, so if you often think that you have good levels, understand that your level can be deviated, and when your level comes back into play, trade it. Okay? So if you take the trade on the first one, you get stopped. Okay, that's all right. It comes back below your level. Take it again with where you got stopped out as your stop, essentially. And most of the time, it's going to go. I will have things to talk about later about multiple losses in a day. I personally I do 2 losses in a day. If I take 2, I'm done. The reason for that, and like I said, we'll cover this more later. Yeah, we'll just cover it later. We'll keep going in order. I don't want to sort of break out of the order. But alas, so those are some setups for you, and how I'm finding my trades is often by finding the target first and then searching for entry. And entry may come in terms of a sweep, a liquidity sweep into supply. It may come in terms of a fair value gap. It may come in terms of a deviation. It can come in many different forms. That's the point of me showing you some of these trades so you can understand. If we do go back to the silver trade, you could see that it was simply a fair value gap into supply here. Okay, let me read the chat. How do you determine your SL when you place stink bid in weekly, daily demand for a brutal bounce like you did with Google Gold? Interesting to know your thought process to see where invalidation goes. Okay, yeah, we will get to that. We're getting to that right now, I believe. So let's keep on moving. Let me get a sip here. Okay, so we were talking about first test, best test. So just to show you guys, again, we had bounced off the low here. First test, best test gave a good short. We're going to move into looking at Bitcoin. So I said, as Bitcoin was coming down, and forgive the I don't know, whatever you want to say, but I was laughing at this earnings call for Full of Cope when Strategy was doing the earnings call, and I was playing some TBC Burning Crusade, and I said orders iceberged to 58K if necessary. Okay, that means I was leaving all my bids on BTC from, I believe we were at like 62K, 61K, 60K, 59K, 58K. Now we'll go over and we'll look. Let's use Kraken here on their interface here, and we have BTC. Let's just get the standard BTC USD. There we go. First test, best test, guys. Monthly. We're on a monthly chart here. Okay, there's a major move coming down. First test, best test. Simple as that. I layered my orders. I layered bids in. If you were following along with my Twitter at the time, I posted to you guys that I had an average entry of, I believe, 61K. Took profits on the bounce. And that's it. So first test, best test. You can apply that terminology, that thought process to high time frame, low time frame. You can apply it to all different time frames. First test, best test. Now, we are going to go into a segment where I talk about when things need to be flushed. In this scenario, maybe at some point this low needs to be flushed. Hold on. Do you prefer trading just the NY session, or it depends on the level or some specific pair? Honestly, I feel like the best trades most of the time come between 9:38. It could be even 8:30 a.m., 9 a.m. New York time to about 11:30 a.m. New York time. That's typically when I see the highest confidence trades. You might also get a trade somewhere in the afternoon, like towards the close, like 2 to 3:30 p.m. That's if I had to choose a time though, it would be from like 8:30 to like 11:30. That's like peak. And if I really just had to choose like 1 hour, it would probably be from like 10 to 11 or 10:15 to 11:15, something like that. Maybe 10 to 11:30 would be like super optimal. So getting back into this, first test, best test. I did not think this low needed to be swept. Maybe it could be swept at another time, but the thing is, when you're coming down into a monthly level like this, you cannot think that this needs to be flushed out immediately when it's so far away, right? We're talking 62K versus into the 40Ks here. So I didn't see that as necessary to be flushed, but we are going to talk about when flushes are required moving forward. I also believe I had a hype trade. Okay, we had hype trade. All these trades, by the way, were on my feed. They were all called live. Not the ones that say education, by the way. So if it says like education, those are trades I just took myself and I just talk about them. But trades like these were live called. I called, when I entered, when I took profit, etc., etc. So hype chart. I believe Kraken has newly listed hype, so we might need an older hype chart. We'll go to this one I have here. Let's get out of the replay tool. First test, best test, once again. So let's clear this out. When hype had come down to, I believe, 28.5, that is when I had called for a long. First test, best test. Okay, so this is the first test of this level right here, right? Simple, just simple SR flip. I mean, you can really call it whatever you want. Some people will probably call it a breaker. Some people will call it SR. You can call it, sort of, market structure break even, depending on, downtrend here, high, lower, low, breaks the previous lows, high, okay? First test, best test. That's all that really matters. And you get the strongest move out of it. And if you remember, we took profit right at 37. Perfect take profit as well. So why, again, is it first test, best test? But look at the move that you get. This is the strongest move you got. From there, I mean, okay, cool, you get a little move here, you get a little move here, you get a decent move here. But this was the best move on the chart in the recent months. That's why first test, best test, okay? All right, let's move on here. Let's go to, okay. So during major moves, and this is, we're moving on. So we're now done with the first test, best test segment. We've covered bias. We covered first test, best test. We're now moving into during major moves, flushing out the obvious demand and supply is sometimes necessary. We're going to look at gold, then we're going to look at Bitcoin. Okay, so looking at gold, I had called gold early on, and I had said that, give me a second here. I had called gold early on when it was crashing, and I had said that we need to sweep the low to continue onwards. All right, let's go and look at the gold chart. Let's see how, let's look at Kraken's gold chart. See what they have over here. So we're going to go to futures. We're going to go to GC. So they have GC, which is the gold contract, and they also have MGC, which is the micro gold contract. All right, so let's look at gold here. Okay, we do have the data. Perfect. So if we look at, can I get a week here? Nice. So we're once again seeing first test, best test in its form, right? On a high time frame, we're seeing first test, best test. If we move down to a daily, we'll see that we needed to flush a level, right? And what you're typically flushing is the origin of where the up move began, right? So this is like sort of where the big up move begins, right? You have this consolidation, this big up move, and you're looking at this low. Why are you're looking at this low? Because there's a lot of people who are thinking, let me bid this level here with stop below. Okay, that's what a lot of people are thinking. Now, going back to what I taught you guys earlier about the deviation, right? So you see that again here. It comes towards the level, it deviates the level, and there's your entry. If you're someone who can't always spot these type of things, you can always just plot clear levels on a chart, clear obvious levels that are going to get manipulated, right? That's what we're seeing here. But you can still just plot these levels and just wait for the deviation to happen and get in on the retest of the second try, okay? But for me, the way I see it is that I want to be in from, I want to try to be a sniper, right? If you guys remember my Google snipe from Google earnings, literally sniped it by like, I don't know, it was like 10 cents or something. It was perfect. And I did the same on pretty much on silver and on gold. So I like to think about the manipulation that's going to occur ahead of time and also combine it with the high time frame. So the way I saw it was that we were going to sweep this low. Someone was asking me about stops. So just to finish this thought process though, we were on gold. So I had gold sweeping this low and going back up. And what did we see? We saw gold sweeping this low and coming back up. All right, played out perfectly. Sip here. Okay, so how would I set stops on these sweep type plays? Well, for me, I think on this one I said I'm just gonna give you guys like my thought process as if I was looking at it fresh. So my thought process was based off of liquidity into demand, right? So we had the daily liquidity. I thought that the daily liquidity was below here, and I thought that there was a potential to go into this supply, sweep this, and then I actually remember, I'm not sure if I was thinking about this or what I was thinking, but I was pretty sure that we wouldn't be going much below supply, like or demand here. Sorry, demand. I wouldn't see much point in going below demand. So what I likely did was I likely put my stop below demand plus a couple extra ticks. It was probably something like this. So if I had to, spitball what it was, entry below liquidity here, stop was probably something like this, and then initial plan take profit was around here. So it was roughly like a 2R trade. I did obviously take some profits earlier, as I usually do. I probably took profits around here, around 1.5, 1.2R. Probably took more. Okay. But that's I can't give you 100% like firm grasp on how I set every single stop. It really depends on what the chart looks like at the time and where nearby local lows are, and if I think they can get swept, right? Like if I saw like these lows, like if there was just a low here and there was a low here and there was a low here, and I was like, oh, like I don't know, those could potentially get swept too, then obviously my stop wouldn't be here. I would have to do something else. So it really depends on the chart. That's the best answer I can give you. But probably as we go through more charts and as you watch more of my content, you'll get a gist of how I do things. Okay, so just to show you guys that it wasn't some type of fluke, not only did I, predict the flush on gold, but I also, if you remember, oh, and here's taking some profits on the gold trade. I also, if you remember, called the flush on Bitcoin. And I told you, type of move that front runs the normie bid zone. This is the normie bid zone, then cuts right through it all at once later. They don't get to enjoy this current bounce, and when they finally get filled at support, their stop below support gets tagged as price pushes to mid 40Ks. It's a cruel world. Okay. So if we go back and look at the Bitcoin chart during this time, let's go back to Bitcoin here. Hopefully the chart goes back enough time. I'm sure it will. It does. And as I said, the low was going to get flushed. Okay, we could pull up a daily chart here. So a lot of people thought, and this is the same type of thing we saw on, it's the same consolidation that you see on gold. It's the same consolidation that you see on a lot of these assets. And what happens is before you're going to get a major reversal, before you're going to get some type of major reversal, you're typically going to remove people from their positions with some type of flush that, normal market participants don't expect. You have to be years in the market to see these things coming and to really understand it. So again, not only did I predict the sweep through the low on gold, but then we can also go and predict the sweep through on Bitcoin. It was, obvious even back in 2024 to me. We can go to silver, and I can show you that on silver. I predicted that this demand level on silver would get eaten up, which it did. We can go over and we can look at silver now. Let's pull up SI. Which one's doing the most volume? Okay, so their micro silver is doing the most volume, which is, but honestly, even micro silver is, a large. I think SI, normal SI contract requires somewhere, I believe right now, like $130,000 in margin just to open position. So, SIL is 1/5 of the size. So it should be good for most people. Let's put it that way. again, so like a lot of people saw demand, right? A lot of people saw demand. What happened? It flushed the low as I expected. It flushed the low as I expected, and then we got the bounce. And we go back to the chart. It flushed the low as expected, and we got the bounce into the level I called for, took profit. Okay. There it is. See that level right there on the daily? Swept, goes to the level on the daily, boom. And then it goes down and sweeps even more. But again, first test, best test. So that's why I took it right on this first try, played this nice bounce right here. Okay. Yeah, if I could get just get an update in the chat. Is everyone still hearing me? We all good? Are people following along? Moving forward to, let's see. I think we can start closing some of this stuff. Let's start getting towards charting fresh stuff soon. Yep, this was gold. This was the gold take profit. This was Bitcoin calling the flush. Silver calling the flush. Good. Everyone says good. Cool, cool, cool. Nice, guys. All right. So let's keep going. What was this one? Oh, okay. This is nuanced section. All right, we're not there yet. Okay. So in general, right? I think one of the issues a lot of traders have is bouncing around to a ton of charts, right? So let me show you something. See all these charts right here? At the moment, I only have orders set for these. These are ones that I just labeled them bleh because I don't really see anything that I want. Not including, by the way, just for these four. For SLV is silver, gold is gold, SPY is SPX, ES, MES, etc. GC is gold, BTC obviously hype. I just moved them off my main bar for now. The reason why is because you should become a specialist in one or two charts when you're looking for low time frame stuff. Okay, you cannot be a specialist in like 10 different charts. It's ridiculous to think, I believe. A chart is basically like a living, breathing thing, and you have to like you essentially have to nurture your chart. When you disconnect to it, even like if I disconnect from ES even for like a day, when I come back, like I might not be completely in tune with what's going on. So when it comes to just some advice from me, and you can choose to take it or not, but become a specialist in one or two charts. And for everything else, like you can just have bids set. Like I'm not focusing on Nvidia unless it comes down to here. I see a bunch of fucking built up lows. That's what I see. And I think this is, I don't care what it does. I don't even care if it goes back up here. I think eventually it's going to come and take out all these lows. Eventually it's going to come and sweep all these lows. And once it does, that's when my orders are either going to hit or I'm going to pay attention to Nvidia for a day or two and it's going to bounce and keep going higher, most likely. But I am not interested in NVIDIA until it takes out all these lows. I'm not even looking at it, just have some bid sets. Google, again, not interested until it wipes out this demand. I had the little flush. I took, or no, the flush was here, I believe. Took my little earnings profit, and since then I've just been chilling. I needed to come down and flush. I needed to work this fair value gap, either fill this inefficiency fully, whatever it wants to do. But again, I'm not looking for short-term, low time frame trades on Nvidia, Google, any of these. Right now, I am currently, quote unquote, a specialist with ES and silver. Those are really what I have been enjoying trading the most. Everything else is just on the back burner for me, and I look at it just occasionally, high time frame stuff. Okay. Give me 1 second, guys. I'm gonna stretch my leg real quick. See, refill my water. All right, great. We're back. Okay, so now we're getting into some nuance. And you know, I'm sure some of the other stuff was nuanced too, but I'm gonna try to speed this up a little bit. We're at 250. Okay. All right. Combine a key level with market structure break. MSB alone is not enough, and trade on the extreme ends. Okay. So when we're talking about this essentially, and I'm just going to show you this trade here. So we had equal lows left behind, right? And when price came down to here, I was looking at the chart and I was like, how the hell is it going to be that or I was essentially thinking like, you know, how can I get aboard because I want this low swept. And your mind starts thinking like, oh well, I should just literally short anything. Like I know it's gonna I know the low is gonna get taken, so I just need to short. But what's gonna happen is you're gonna have terrible risk reward, right? So you just need to be patient, and you either get the trade or you don't. So price comes back and you short the supply that caused the local market structure break right here, okay, and then you get the market is actually kind. It gives you the perfect entry if you're just patient. So you had equal lows built up. You're wondering where to get short. You literally just wait for the perfect pullback into supply, and then you target the equal lows. Like it couldn't have played out any better. So not only that, but and you know to go over the nuance, but you want to combine the key level with the market structure break, and you want to trade on the extreme ends. So trading on the extreme ends means not to take a short in here, not to take a short in here, not to take a short in here, right? We're trading on the extreme ends, so we only want to take a short at the supply, and we want to TP at the equal lows. When it comes to the market structure break, you get that here. You can see you're just making higher lows, higher lows, higher lows, higher highs, boom, big candle down, market structure break, and that is when you find your short off of supply. So it's not enough just to have the market structure break, but you also want to have like a nice clean level there. And there's actually even a larger level. Just let me pull that up. March 4th, 1530. Okay. March 4th, 1530. Give me a second. March 4th, 1530. So the trade was right here. This was the trade. Okay, so the other thing that was a major factor in this trade is trading on the extreme ends, right? Like, so trading on the extreme ends of things, that, and you just look at it, you can just be like, oh yeah, this is an extreme end of the trade, right? And you could also say that there was it was on the 15, I believe, maybe. Yeah. So on the 15, you had a fair value gap over here that had never been, you know, fully breached or fully mitigated, right? So not only do you have the local, you see this here, now we're going to move over here. So not only did we have the market structure break, but we also had the confluence of it being into a key level that had not been broken yet. Okay, so you have multiple points of confluence here. You had the equal lows built up. Okay, low here, low here. You had market structure break. Boom, market structure break. You had price coming back perfectly into the previous supply that caused the market structure break. Price goes down to the equal lows, takes them both out. Goes actually even lower, but I took the, you know, just the aggressive take profit essentially. Okay, Firestream, thank you, Moscow. Yeah, we'll take some requests at the end. We'll see what we could do. So again, just to, you know, clear that up, it's a simple high confidence trade. You're looking to trade on the extreme ends. You're looking for the market structure break. You're looking for the retest. And it's really that simple. That's a clean trade for you. Okay. And I was also just talking about this too, where, you know, anxiety driven and over aggressive shorts are often shitty trades. The markets do often go up. You should just wait for, you know, the 0.5 to 0.618 pullback, or you should miss the trade. Just wait for the pullback, right? Like I just showed you that ES trade, even though I just closed it, but just wait for the clean pullback. Even though you know it's going to go to the low somehow, it doesn't always mean that it's going to go It doesn't always mean that it's going to go immediately. Like sometimes the market's just going to be kind and it's going to let you in, right? And if it does just go, it's whatever. You just look for the next trade. Hi Chase, what platform do you use for trading BTC and ES? Well, moving forward, I will be using Kraken. For ES, I do use a traditional broker, but like I said, Kraken does offer these these assets. I told you about, ES, MES, which is the micro contract. Okay, so for people who are using a smaller, um, people who are using a smaller portfolio size, MES is where you want to be because it's 1/10 of an ES contract. Okay. And they also have your gold, they have your silver, they have all that. As far as trading crypto, I'll be doing my crypto trading on Kraken when I do. But to be very honest with you guys, as I always try to be, crypto has just not been a huge priority for my trading lately outside of any major moves. When I saw Bitcoin coming down into 60K, I publicly called long. Everyone saw that. I said I had orders iceberg down to 58K. We got all the fills all the way down to 59K. I had like a 61K average entry, I believe. So called that all live, took profit on that all live. Yeah. So while crypto is not a huge, it's not a huge part of my trading at the moment, I am still actively keeping an eye on it. And when opportunity does come, I will talk about it more. Just the way I've seen it, like, for me, let me just pull up the Bitcoin chart real quick. When I pull up the Bitcoin chart and I look at it, and Bitcoin loves to do this, right? It loves to just do the whole entire move in like, a couple days and then chop endlessly. And really the only thing I saw here was like, okay, a low and a high. And there's your sweep of the high and it comes back down inside. Probably sweep of the low next, I would say, but we'll do real analysis later. But there's also just something about this, right? Like it can't even give a proper test. It can't even give a full fill of the weekly fair value. There's just a lot that, and I don't want to go down the negative route, but there's just a lot trading wise that I haven't been a fan of Bitcoin and trading Bitcoin in a little while. Doesn't mean it's not tradable. There's still great moves to have. There was still the great long off the monthly block. There was this amazing fair value gap trade here on the monthly. Literally beautiful, textbook, picture perfect. I think the problem is that a lot of crypto Twitter, especially, and especially influencers, we're almost afraid to like talk about shorts and talk bearish about Bitcoin because you get fucking pelted, like you get stoned to death the second you post a short. So I think that's a lot of the reason that you miss some of these trades on Bitcoin, and even why I miss some of these trades on Bitcoin. Because if this is a different type of chart, if this is a stock, like this is just an easy short, and you play it all the way down to the demand, like amazing trade. So there is still very much clean trades on Bitcoin. I don't want to pretend there isn't. Just for me, I find that my trading style very much leans into like quick moves. Like I've always loved the quick move. If you've been with me for years, you know that I've always loved like the quick move. Whether it be, I always talk about Bitcoin and I talk about flushes. And I'm like, oh, when are we getting a real flush again? Like, I always said that shit. It happened so many times on Ethereum. It happened so many times on Bitcoin. And, just being able to get some huge, massive flush where everybody gets liquidated and you get literally a 10, 15, 20% bounce in like an hour. Those were the best trades ever. That was the best trading time for crypto. And we don't get a ton of that too much anymore. But alas, I've found that same type of style on low time frame ES, low time frame silver. And who knows how long like the silver chart is going to act almost like a like a meme coin chart essentially. It probably won't be forever, but ES, ES, NASDAQ, NQ, like these charts often have these beautiful moves just playing out on much lower time frames very quickly. So I've really found, essentially like my edge and my joy to be there recently. Doesn't mean it'll always be like that. I think times change as you trade. In the beginning, in the very beginning, I was looking into like Forex. Then I got into crypto. Then I was trading on Ether Delta and all, the shitcoin exchanges. And, then eventually started only doing like, like majors, like Bitcoin, Ethereum, Solana. I had like that phase. And then I started doing a lot more trad stuff. And so it's just, I think I'm constantly evolving as a trader and just going where I find it's easiest for me to make money. And right now, I found it's easier for me to make money in ES and in silver. Okay. Where were we? So yeah, don't play deep continuation when you miss an entry. So sometimes you are going to miss an entry, right? Let me just use. I could probably just use this as an example. So let's say I'm trying to think of something. I'm trying to think of like a scenario. Yeah, this just went to target so quickly and cleanly. I can't really use this scenario. But let's just pretend it didn't. Okay, just for a second, pretend that this candle stopped here, right? And let's pretend like you shorted here. Okay, so you originally had the thought to get short here, and you just didn't have the balls to do it. You didn't want to do first test, best test. You didn't want to trade on the extreme end of things. But now all of a sudden you're like, oh, I know that it's going to monthly demand. And let's pretend that it comes down and it bounces before the monthly demand and it bounces back up. I mean, you're gonna feel like an ass. So you don't need to, and this happens, so much essentially in like, I see it on ES every day, is to where the market is like, it's obviously going a certain direction, right? I'll just draw, right? It's obviously going towards these built up, whoops, I need something lower time frame so I could actually draw. Like it's obviously going to these built up lows, right? So there's some equal lows here, and it's obviously trending down towards them. But like if your short was up here and you're looking at it down here, like you don't play the deep continuation short just for the last couple pips. Like that's dog shit. Don't do that. Because what's going to happen most of the time is the market's going to come back and it's going to give you a second chance. And then there's your trade. Okay, so don't play deep continuation. I've made that mistake before where I was like, oh, I need more confirmation, quote unquote. I need more confirmation. And what you end up doing is you're playing these deep continuation trades when all the good risk reward is already gone. You just have to accept the risk at the extreme ends and where you're supposed to enter. Okay. Last little piece of nuance is use the higher TF block. Silver. Man, I didn't realize that talking loud and whatnot takes it out of you a bit. Okay, use the higher TF block. Silver, March 3rd, 445. Okay, let me pull this up. When did I say? March 3rd, 445. March 3rd, 445. Okay. Okay, so here's a little piece of nuance for you guys. When you are doing one of these shorts, if it's like, first test, best test, I believe this is the trade I just showed you from before, by the way. I think this is one of my educational trades. But you want to use the higher time frame block, right? So if you're looking to short this here, and there's you have these blocks, you have this block on the 30-minute, right? And then you also have it on the 15. But what some people are going to do in this situation is they're going to just mark out this block here. on the lower time frame, right? So they're going to mark out this one on the higher time frame, and what's going to happen? They're going to miss their entry, right? For this clean little short, right? It's just a little move, right? But look, equal low, lows built up, market structure break, price comes down and takes liquidity here. Okay, it was a perfect little trade, but some people would have made the mistake of only shorting from the lower time frame, higher level block. Whereas if there is a clean block on the higher time frame, that is the one you need to use. And then you get the entry and it goes straight to target. Okay, so that's a little nuance for you that I don't see talked about a lot, is make sure you are using that higher time frame block, especially if it's clean. Okay, where to from here? Oh yeah, that was this trade again. So there it is, all, you know, in all its glory. Okay, where to from here? That's using the higher time frame block. Okay, time to chat for a second, then we'll chart. All right, don't die on the hill, don't pull your stop. I found out that most of the time when I'm wrong, the market goes against my original view quite strongly, so I should always just take my initial small hit. Okay, so one sec. Yeah, so long story short, don't pull your stop loss. There was a day on ES. Yeah, there was a day on ES. Oh, what do I do? Yeah, I chart it this way. Yeah, okay. So this day on ES, I was great stream. Thank you. You're welcome. So this day on ES, I had a bullish bias. And I'll show you why. I had a bullish bias this day because I had seen price reclaim, and I know we had talked about bias earlier, but we hadn't yet swept the high, I don't believe, right? Or maybe, you know, we had. Well, maybe I contradict myself a little bit here, but point was, I had thought we were local bullish bias because of this, because we had reclaimed this gap down, which was like the war gap down, and I was like, oh yeah, I think this is gonna go up a bit more now. And then what ended up happening was that we just crashed all day long. And I had pulled my stop loss from my bid. I think I had looked at this and I was like, oh, and this is typically like, you'll typically see a good trade out of this, like something like this. And then, yeah, I mean, I guess the market, you know, here was the thing, the market didn't even need to flush me out. The market ended up going lower. It was just weak. It's as simple as that. But, you know, I had originally thought, I was like, oh, okay, so, you know, this demand here, we reclaimed the breakdown, right? This was the gap down, like the war gap down. I forget exactly what the news was, but there was some major gap down. And I was like, okay, this has to be bullish, right? And I had already seen this sweep, right? So I was like, okay, this swept, like we don't need to go back down here. Like here's a clean demand. Here's a breakout. Like this is good. So I think I bid around here. And eventually we just crashed on through. Just crash. And I was just like, you know what? I'm not taking my fucking stop out. And I think I had my stop like here. And then it goes lower. And I was like, oh shit. Now I'm down like 2 times the amount of money I want to be down. And it's just, you know, and it's a terrible feeling because, so I said, made the rookie mistake of pulling my stop, got stubborn. Safe to say World War III is on the way. So here's the thing, right? You know, the one time you pull your stop will be the one time the market completely fucking kills you. So I was lucky enough to get this bounce in return. Thank you, market. It let me out. I got out at break even. That was great. Or maybe I took like a little cut. I forget what it was, but it was very small. But the point is that the next time I do that, this is going to go, it's going to fucking puke and I'm going to get what I deserve. And it's going to puke and it's going to puke and it's going to puke. So do not pull your stop. You know, pulling your stop is stupid. If you're wrong, you're wrong. Take your designated risk and take your stop out. Don't pull your stop. It's not intelligent. And when you do pull your stop is when you're gonna get fucked. Eventually the market is gonna fuck you. Okay. All right. Looks like now we're at my homepage. It looks like we're yeah, so don't die on the hill, you know. When you think you have like, you know, you get the bias wrong and you know the trade is wrong, like you don't pull your stop, you don't just go forever in the opposite direction. Just accept the market for what it is and look, and that's it. Two losses is a wrap for the day for me. So here's why. For one reason, it's tilt protection, right? Um, you will like just sometimes get tilted and like just start spamming like fucking market buy and market sell, and that's literally how you blow your account in a single day. Like you hear stories about that shit. So I have a firm 2 loss rule. I take 2 losses and I'm done. Another reason for that is that you can make back 2 losses the next day, no problem. If you have like 3 or 4 losses in a single day, you have immense pressure the next day. Like you need to have like a great day. Like what you're gonna have like 3 winning trades. You're gonna have two 1.5 hour winning trades. Like you need to have an amazing day when you take 4 losses in a row in one day. So 2 losses in a day is fine, right? You lose 2R. The next day you have a 2R trade right off the bat. You get one trade, you win it back. You're back to even. Okay, so 2 losses is the rule for me. If you take 3 or 4, then the next day, like I said, the next day is way too overwhelming. There's too much pressure to get your money back, etc. 2 losses per day. Treat your market with respect. You don't need to be spamming markets and thinking, you know, you're just someone who mashes the fucking market key and you know some baller. Set your limit orders properly with intelligent setups, and you'll notice that a majority of my setups that I post to you guys, it shows limit orders. All right. I'm not used to talking this much. My throat's killing me. Alrighty. So yeah, time to chart a bit. Make the chart tell you a story. Okay. You need the chart to talk to you. They all have a story to tell. Okay. So let's look at ES, and then we'll go down to Bitcoin, and we'll look at hype too. And if there's any requests, go ahead and request some charts in the chat. And I'll do like 5, 10 maybe. We'll try to rip through them quick, and then we're gonna wrap up. So what it means to tell us, have the chart tell you a story. Or actually think of it this way. Think of the chart as like someone who can't talk, but you need to talk for them. So you're just looking at this and you're like, okay, well, price has been ranging. It's been ranging. Price puts in a high. Okay, great. Well, after it put in a high, it put in a low. Then it swept the high. Then it swept the low. Then it made a lower high. Then it tested the low again. Then it made a lower high again. Then it tested the low again. Now it's breaking down through the low. So you get what I'm saying here is that we're narrating the chart in a way that you can't get the bias wrong. Like right now, the bias is bearish. Right now, the bias is bearish until we reclaim a higher low. So if we come up here and we reclaim a higher low, if it does something crazy like this is the neutral zone, right? You don't know if it's just like if this is the final fuck you before down, or if this is going to flip to high. And then how do you really get long here? Like if you're consolidating above the all-time high and you gap up once, the first pullback into like fair value gap is where you buy. And if you get stopped out, you just go neutral again and you wait. Okay, hold on, 3 new messages. Legend Crypto Chase, thank you. Okay, yeah, looking at some of these. So that's how you do that, right? So this is the neutral zone. This is the don't fuck around zone, because you don't know if it's is it just coming up to do like a final, FU before down? And then if it gets back above, it consolidates and it impulses up. Any pullback on like your next candle, right? So you have a next candle here, and now everyone's FOMOing, and let's say there's a little consolidation here or something. Boom, you get the little pullback. right into the fair value gap on that, maybe like, a little SR flip here, right? That is your long with your stop below this consolidation. And that is, if you get stopped, then you're just back to neutral, okay? But that is how you would find the long there. Now that drawing, by the way, is not what I think is happening here. Just want to be clear. My thought process is to look at this high time frame, 3-month. I think it may take some time because the market is just always, when it comes to the S&P, there's always passive flows into the S&P. We know that, we know that longs and pullbacks are very short term. If you were with me during the COVID crash, no, not the COVID crash. If you were with me during the tariff crash in April of last year, you would know that we caught the bottom on S&P and we also caught the bottom on Nvidia, which was this move, sweeping this low here. Okay, caught that and also caught. And you can find them on my feed. Feel free to go back and look at those times and you will find them. Yeah, so we know that pullbacks on S&P and on stocks too are mostly very short-lived. Even if we look at Bitcoin, right, we could see that the pullbacks are, they can take some time, but the overall trend has been up, although things are looking suspicious to say the least here, but we can get more into that in a bit. But anyway, overall bias for ES is to get that back down below 65.83 here. I think this will fill back. I think it'll be a choppy, painful ride down, most likely, as it always is with S&P, and then you'll get probably, a big move sort of all in one time, over the course of 2 or 3 days, and then you'll get your reversal. That's sort of what I'm looking for at the moment, so my bias is bearish. In terms of anything locally, like I said, for ES, it's really about, trying to find out what your daily bias is and seeing if there is a great target to, aspire to see price trade to, right? So this was an amazing target you would have if you were looking for shorts in here. Once that target had been taken, that liquidity had been taken, now you're back to being a bit more neutral. I did think that we were potentially going to come up and take these daily highs out. I'm not sure if we still will somehow, or if these are all just lower highs. The only thing that does give me some caution there is this sweep right here. So yeah, now it is a tough call on ES. Even if if we just take it how I had it set up before. Did I freeze? Chart froze? What happened? Hello? Is it me or is it TradingView? Oh, okay. Kraken chart's loading. That's good. Oh, I think it's TradingView. Okay, well we have it here, so this is good. So again, if we were looking at just local bias, sweeps the high, sweeps the low, lower high, and we just keep testing the low over and over and over again, right? This looks slightly different, but alas. We would have to think that any type of pullback towards, 68.14 is likely a short. Do we see any, do we see anything in there though that looks obviously clean? Like, do we see liquidity that needs to be taken? And fibbing out this, I told you guys earlier, we're looking for 0.5, we're looking for 0.618, we're looking for those type of pullbacks. This high here into this supply, it's confluent with this level, actually looks pretty decent. The only issue I would see with this trade is that you are banking on this finally breaking down in a major way, because there's not really many targets left is the thing. We already, let me see if I can get the distance from over here. Yeah, we already took this low out, so I don't think there's too much to do besides break down in a major way, like into the 66s, potentially even lower. So now you're getting to the point where you're like, if you didn't find a short, you're sort of doing a bit of that, it's not deep continuation, right? But the reality is I don't think this market wants to really give people an amazing opportunity to short this breakdown, right? It like deviated it, deviated it, deviated it again, deviated it again. Is this another deviation? It because the other four times it came back above the key level, came back above, came back above, came back above, came back above. Every single time it came back above the key level. So, the reality is this has been a tough one to read to try to time this breakdown. If I had to think of a potential trade here, it would look like that. I like the confluence between, let me see if I can make this big. I like the confluence between the supply here, the liquidity above this candle here, and the 68.14 key level from the daily. Okay. So I think that's all right. But again, is this high confidence? Not fully yet. What you can do is you can apply a technique. TradingView been awful today. Yeah. What you can do is you can apply that technique I discussed early on, which may be a potential. If I'm not certain about something, right? Sometimes I just wait and maybe the trade goes as I expected and I don't get it, and that's okay. That's just like learning information for the future, which is fine. But maybe it does that. And then once it's back below, boom, then like that's likely your really good entry, at least to this local low right here, if not lower. Okay. So that is how I would operate in like this scenario here. But again, this isn't necessarily like super high confidence in my opinion, just because of how we've been seeing the deviations. It's almost like there's someone just being like, nope, like it's not ready to go yet. There's some big bank out there that's like, nope, it's not happening yet. So it's been choppy breaking below the key level. So that's something to be cautious of. All right, let's look at Bitcoin. All right, I haven't looked at the Bitcoin chart in a bit, to be honest with you. So let's take a look here. So we are at the monthly demand. It is, I would say it's difficult to short into monthly demand. If you are looking for some type of short, what you're likely looking for is a push below the monthly block. You're going to see people FOMO short. They're going to be like, oh my God, it's going to crash, it's going to crash. Short squeeze back to the top of the monthly block, and then your short is at the top of the monthly block to the monthly low. Okay. That's likely how I would look to play that on a high time frame. Going down to a lower time frame, let's go weekly. Looking at weekly, we could see that we put in a low, and then we put in a high, and then we swept the low, we swept the high, most likely going to sweep the low next. We've done this before, right? I've talked about this. Put in a low, put in a high, sweep the high, crashed below the low. So in this case, it wasn't a sweep, but yeah, sometimes you'll get that sweep, sometimes you won't. I do remember talking about how I was looking, I longed actually below these lows, and I said that, if you don't get the bounce from here, you're not getting a bounce at all. I remember saying something along that line, and that got stopped, and luckily, I took my stop fairly quickly. I think it was, I don't know exactly where it was, but I want to say I took that stop fairly quickly, and then we had major continuation to the downside. So again, going back to how I talked about, don't pull your stop, and when you get your levels right, you're gonna realize most of the time that when you're wrong, you're majorly wrong, right? And the market's gonna go against you. Like that's how your trade should work. Like when I have a short on ES and it gets stopped out, like what happens is it's like an uptrending day, and I just had the bias wrong. Okay, so yeah, now you see how that works, right? You put in a low, you put in a high, sweep the low. So possibly we're getting the same thing here. Put in a low, put in a high, sweep the low. Really, when it comes to, this chart on a lower time frame, honestly, it's been choppy, right? Your trades have been at the extreme ends, right? So if you are looking to trade Bitcoin, we're looking at the extreme ends, which would be, you're seeing the big move from demand, you're seeing the big move from demand, you're seeing a big move from demand actually. Look, because this chained all the way into here, right? And now you're seeing a big move from this side, right? So you could have simply just used the daily or the weekly chart in the monthly block, right? And just say, okay, well, this is a long, this is a long, this is a long. Really, there weren't any shorts really until here, and that's a short. Okay, so there was a couple Bitcoin trades in this range here, obviously. If you are if Bitcoin is going to be, you know how I talked about being a specialist earlier, if you're going to be a specialist in Bitcoin, then it's okay to be trading this inside here. But the reality is that I haven't been paying much attention to Bitcoin at all, so I'm not going to dig deep into this price action in the middle here because I don't feel like I have a strong pulse on it, right? If you were short here, I would say, okay, well, this is your like obvious TP at this low, right? You TP here and then you see what happens. But yeah, that's really like the gist of it that I can give you for Bitcoin. All right, let me see what I have in the. All right, Whoop asked for Aster. Okay. Let's see. Do they have Aster on Kraken? I'm not sure if they do. They do. Okay. So yeah, these are just requests, guys. If you have any requests, feel free. Zamp, this is being recorded. I very much hope, because I've literally spilt like a ton of fucking alpha this stream, so hopefully it is being recorded. But I believe so. I might need a chart with more data. What chart has a lot of data? I mean, I guess Binance should, right? I don't even see it. Stamp. I mean, yeah. So guys, there's definitely gonna be times where you like ask for a chart, and I probably just won't have anything to say. There's not much going on here, right? If this ever does rally back up, if you have some type of long position, all I can tell you is that you can wait for a full fill of this fair value, or even if it's strong enough to give you that, I'm not sure. This would be your TP1, this would be your TP2. But I like I said, I'm not gonna have stuff for you when the chart is like just dog shit. Okay. Sol. Yeah, I haven't looked at Sol in a while either. Let's go on and take a look. And yeah, guys, this is the Kraken Pro interface, by the way. You can have your own colors, just trading view integration, your order book, your orders down here. Your order form. It's been a pretty simple transition for me to get used to and work with. So okay, let's see if there's anything on the monthly. So long story short, we come up, we sweep the high, deviate the high again, price comes down, basically like make a lower high, right? So price comes back up, it makes a lower high. It does sweep like essentially the origin of this breakdown, right? So this was where the major breakdown occurs. We come up and sweep it. Price has been moving down since. You do get a nice little fair value gap tap in there. That's pretty much a perfect trade. And then it goes all the way down to, does it take this low? It does. Okay. So that was like a really good trade right there. But you can see that a lot of these crypto charts are looking very much the same right now. The major move has been done, and they're mostly anemic in the area. I think that it's likely going to require a period of, maybe it's a period of consolidation along with the final flush before we get the type of move back up and towards, like the 120s. That's how I would see Solana backfilling this full fair value gap, something along that nature. But yeah, you don't really have like anything that says like, oh yeah, this needs to go up immediately. Like it already did the major move down, now it's consolidating. random wick. Might need to, not random, but you get what I'm saying. It's sort of just down here by itself. You know, you swept this, but sort of blah. It's like you can't even, like, you sweep it, but it doesn't even give you anything, right? Like, what does it give you? Like, it sweeps the low just so it could sweep this high, and then it immediately comes back down to the low, immediately retests the low again, sweeps the high, and now it's coming back down towards the low again. You would think that if you come back down, whoops, you would think that if you come back down, you get back below here, you know, you deviate, you chop this a little bit maybe, and then there's your move, and I don't know, you see what happens down here. But the reality is, I think no matter which way you're looking at these charts for crypto, you're likely looking at a bit more consolidation. Who knows how long exactly that takes? Maybe it's until, you know, the war essentially wraps up a bit, and you know, until ES can find its footing, because you know, remember that you know, Bitcoin and crypto is essentially just like, it's mostly just risk on, is the reality. So if ES like turns around and, you know, it looks like it's gonna have some good days, then we'll likely see some good days in crypto too. But until then, depending on how long this war goes on, depending on how I told you guys how I think ES could go into the 6500s, that may very well look like, you know, perfect scenario would be like continuation down, but it's a fake out, and you know, we get some type of like war resolution, right? And you spend like 1 or 2 days down here, and then boom, you do that, and you market structure break, and you go back up and you fill into here. That would be like a clean type of trade I'm looking for. And you would look at the key level. You don't really care too much about this wick. You're just really looking at the key level and like, okay, what is it going to do? You can be very patient here. Like, it can come fucking down here, and once it reclaims the key level, then you know it's gonna fill all the way back up to here for the most part. Um, doesn't really matter what it does down here unless you want to be a long-term buyer or holder, in which then it does make sense to start looking and being like, oh, okay, well, where is my, you know, where is a high time frame level that I want to buy? For Solana, that would probably, it would probably just look like here. I don't think it needs to be too complicated. Likely doesn't need to flush all of this because you already had like some major flushes here. So you would be flushing this low again. You would be flushing this low. A wick into here would likely be a great buying opportunity. Okay. Do you think demo trading is useful for someone who's been trading for 1 year and doesn't currently have enough capital to trade? I think demo trading is like, you're missing like one of the key aspects of trading, which is like the psychological aspect of it. And just, yeah, I mean, I don't think it's necessarily bad for like strategy practice, but understand that when you move into real funds, like, things will feel different. I would definitely say um like, so let's say you have very low capital, right? And I'm, you know, I'm not trying to be you know, I don't know what countries people are from or whatnot, but let's just say your trading capital is like $500. I'm gonna say that's very low. You know, maybe some people don't have that. Sorry if not, but I have to use that number, right? So with $500, you certainly can't trade an ES contract, you can't trade an MES contract, but what you can do is you can trade one SPY, which is the same as the SP 500. Okay. Do they have it on here? They might have it under this tab, but so this is all depends on your jurisdiction. I can't really go over that. So we'll go over here. And so SPY, right? So one SPY, oh, I would have needed to, sorry, I would have needed to say like $1,000. So, you know, and I'm not sure if maybe on like, maybe Robinhood or something would like let you trade like fractionalized SPY. But so this is the same as the ES chart, but you can buy one position for $672. So if your account is set up for longing or shorting, or you might be long only with that amount of capital, but you can essentially take these trades and, you know, make, you know, like $10 here, $20 there, depending on how big the move is. So that's something to think about, is to, yeah, you can, no matter what your capital is for the most part, of course, if you only have like 10 or like $100 or something, it's going to be extremely difficult. But, if you're somewhere between the range of 500 and $1,000, if you could save that up over time, you can trade one, SPY essentially, and that you would be able to take all these trades that I've been talking about. SLV, this is your silver. You can trade silver with $75. Okay, so one SLV. So you don't actually need 1,000. You can have 500. You can probably trade one GLD with 500. Yeah, 473. Okay, so you can trade one S&P 500 with $1,000, or at the moment it's like 700. You can trade silver, you can trade gold. It is possible to trade real funds with a small amount of money. What do I think about oil? Yeah, I know oil is big right now, but I honestly haven't looked at it, but I can take a look. I'm not sure which contract is currently trading. It's probably K. So yeah, we'll go with K, because silver's trading off of K. So okay, let's just see. I go super zoomed out, right? New chart, I go super zoomed out, and like I talked to you guys about this before. If I'm going super zoomed out, I'm actually going to use the continuous chart. But if you're trading, you actually want to use the current contract chart for the most part. Okay, so we're coming up into this level here. You know, is it going to plow through here? Tough to say. I'm just going to work through it at my own pace like I would if you guys weren't watching. That's really how I can try to find you and give you an answer. All right. So price had gone up. This is way back when it had put in a low. Came back up into the previous supply, dumps. Sweeps the low, comes up into here. COVID crash. That was a funny time when people were worried they were going to get barrels of oil delivered to their home. Comes up, takes all these highs. So I think oil is obviously headed towards this high next. And you'll have to see how it reacts at this supply. Now, in times of major news and war and all these things, I can't tell you, like, so let's say price comes up into here and someone sets off a bomb in the Strait of Hormuz, and the whole strait collapses and oil flies through the fucking resistance. Like, I don't know like the type of things that can happen like geopolitically, so you have to be cautious when you trade things that are very geopolitically heavy. Or simply just use stops, right? That's perfectly fine too. So if I was to look at oil and just purely as a chart, I would say, okay, well, you have a high here that's obviously going to be taken. That's next. So there is a potential short here. Sweep of supply into demand. I mean, sorry, I'm losing myself. Sweep of liquidity into supply. Okay. Let's stop, probably put it like here. And your TP would be here-ish. Is it even a good trade? You get like a 1.2 risk reward. It's not terrible. Now that's one trade, right? The other trade we can look for is the trade that comes up into this high. Now, as I said, we don't ever want to take deep continuation trades. So what we would hope for from here is that maybe we're going to leave this as an equal high, right? So maybe this is going to consolidate, and then you're going to have this high, and you're going to have this high, and you're going to be like, oh, okay, we have equal highs here. And price comes back down, and then you get a long position to take out those highs. Okay, so that is something to think about. You would fib this out, and you would say, okay, so it would need to go even a bit lower, likely into here. So somewhere into here. Now the thing is, again, because of geopolitical reasons, it probably just goes straight to the the liquidity. But I'm trying to stay consistent with my trading methodology, essentially, that I wouldn't be looking for like a deep continuation trade to get just to this high, right? Like most of the move is done. So if it does do some type of crazy pullback and there is an opportunity, I guess we'd have to see what it looks like. And if the war is over and it's pulling back, then maybe it's no longer a good trade. That's why I mostly don't go to charts that are trading crazy based off of news type events, geopolitical events, etc., etc. But hopefully it's still helpful to get an understanding of to how I would look at this in two different ways. I would look at it from the short side, and I would also look at it from the long side, because this is the target, and then this is essentially your bread and butter setup here of sweeping liquidity into supply, and then some type of pullback, likely a pullback towards like here. Why here? Because you have this consolidation, puts in a low, puts in a high, breaks down lower, pushes through. So this is the high I would target. What do you think about prop firm for a beginner? If I don't have enough capital, because you never speak about prop firm, I want to know your opinion. Not like it's fine, I guess. Like I'm not against it. If you feel like you have a good understanding of how to trade, like all a prop firm is doing is just giving you an opportunity to trade with more capital. So I don't see a problem with them as long as they're, upstanding, upright. They do their payouts quick, all those things. Then I don't see a problem with it at all. I know Kraken, I believe, is associated or acquired Breakout. So that I guess that would be the place to look. Even though, yeah, I'm not familiar with them, so I do want to say that. But yeah, I've never used a prop firm myself, but I'm sure just amplifying your capital, if you have a solid strategy in place, and all the terms and rules and everything are fair, then best of luck to you, and I think it's fine. Okay. Trying to see if there's anything that we didn't cover. We went over bias. We went over the first test, best test. We covered a lot of examples. Major moves, flushing, when flushing is necessary and when it's not. We talked about, combining, the nuance of, combining things to find your trades and not doing deep continuations, using the higher time frame blocks, which I feel like is something, people don't talk about a ton. Don't die on the hill. Don't pull your stop. Make the chart tell you a story. Treat your markets with respect. Went over a couple requests. Yeah, I'm pretty happy with how the first stream played out. So I think it was pretty good. Definitely want to thank you all for being here. Want to thank Kraken for sponsoring the streams. It was a good time, and I will catch you guys on the next one. Thank you very much, everybody, and I hope you have a great and healthy week, and good health to your family and friends and partners and all those things. And enjoy yourselves, enjoy life. See you guys all soon. Peace out.